Hi everyone, welcome to the MSc Stakeholder event. My name's Anne Perry, I'm the RECCo Change Delivery Manager. So this is the second MSc event. What I would say is if you weren't able to attend the first event, you can find the recording of that on the RECCo portal. And also, I think there's also a link on the RECCo website as well. The reason I'm pointing it out is that in that first session, we did that full walkthrough of the process and also the principles that the process has been designed upon. We are covering some of that today, but I think the first session gives a much more rounded view if you haven't already seen that. So catch up if needed, and then obviously today's content builds on what's already been discussed. But the focus of today's session is around the consultation and answering the questions that you have to support with the consultation. So what we're going to be doing is we've got Andy, Grace and John Dixon from RECCo who are going to support with answering sort of the detailed questions. But from an agenda perspective, we're going to do a quick recap on the MSc and change proposal R35. Give an overview of the impact assessment responses that we've had, the themes that we've seen from those responses. We'll then walk through the revised MSc process, so where changes have been incorporated, we'll reference that, and then I think we're also going to cover off invoicing, so what is going to happen with invoicing, particularly that first invoice cycle post go live. And then hopefully what we'll also do is answer any of your remaining questions. Like I say, the key element of this session, or the key objective is giving you enough information to support with the consultation response. As Millie said, use Slido. So if you have any questions as we go through, please pop them into Slido. And we've got a few points through today's event where we'll cover off any questions. So please use that. And if you're not able to, you can pop a question into the chat. But I think Slido it just means everyone can see that as well. If we can then move on. So a bit of a recap then. So on the 16th of February, Ofgem published their decision on introducing the Market Stabilisation Charge, so the MSC. This has been introduced via licence condition amendments and it went live on the 14th of April. And then on a weekly basis, Ofgem will determine if the MSC is going to be triggered, has been triggered, and publish that. The obligation for administering and governing the scheme is to be set out in the REC, with RECCo responsible for the administration activity. The charge applies to domestic gas and electricity switches, and if the charge is triggered by Ofgem, when a domestic supplier acquires a domestic consumer, they would pay the MSC to the losing supplier. From a REC perspective, we've actually got two change proposals that have been raised and progressed to deliver the necessary changes to the REC. The first one, which was authority raised, so raised by Ofgem, which was R34. And that really was to just introduce the MSC into the REC and place the obligations on RECCo to establish and then administer the scheme. The change proposal itself was approved on the 8th of April and it was implemented on the 14th of April in line with the licence condition changes. The second proposal, which is still live and going through the change process at the moment, is R35. And this sets out in more detail how the scheme will operate, obligations on RECCo and also on suppliers, and that's in flight at the moment. And if we can just go on to the next slide, thanks Millie. What we've got here is the timeline of where are we with R35. So we are currently within the consultation window, so that's the kind of in the middle there, 13th of May to the 1st of June. The consultation window is due to close on the 1st of June. Kind of post that closure, we'll take any responses that we get from anybody, review those, potentially look at changing solution or changing legal text. And the final change report will then be published on the 10th of June, which will then go to the REC change panel on the 14th of June, who then make a recommendation on whether to approve or reject the CP, and that will then go to Ofgem. And we are expecting Ofgem to make their determination by the 24th of June, with the implementation subject to that decision going ahead on the 30th of June. So that's a timeline, and from a kind of a 30th of June implementation date, that will be the RECCo changes, so the legal text that we need to change, that will go live there, and also the IT solution that will be used to administer and manage the scheme as well. That will then go live as well. Move on. Thanks, Millie. So where are we then, or what's happened so far? So one of the key activities that's happened has been the impact assessment. So the RECCo party impact assessment was published on the 8th of April. We got responses from 5 suppliers. One response was completely confidential, and one other had confidential elements. What we did as part of the kind of impact assessment kind of closure activity was to review all of those responses that we've got, and then to understand how that would affect or shape or change the solution that's been developed and the legal text off the back of that. As part of the preliminary assessment, we've then taken all of those, made changes to the process and to the text, and that has then been published along with the case for change as part of the preliminary change report, and that is what is being consulted on at the moment. What we thought it would be useful to do, though, is to walk through some of the key themes that we've seen out of that impact assessment, out of those responses. Just to talk through what the theme was around. What I haven't done is taken verbatim any of those comments, but we'll sort of wrap them up into some of those key themes. And then what we thought we would do would be useful is to just talk through off the back of that what changes have been made, if any, or what principle we're then reverting back to that's helped us to decide how we would respond to or consider those responses. So what we'll do with kind of Andy, thanks for coming on. Kind of I'll talk through the theme, and then Andy, if you're able to kind of give a view from a RECCo perspective around that administration and the management of the scheme of what changes we've made.
Yeah, sure.
So, brilliant. So the first one there was we did see a number of comments, a consistent theme around the payment terms of 5 days not being sufficient, and that limits the time for internal review and validation of statements.
Yes, so we took this feedback on board, and we're proposing to extend the payment terms to 10 working days based on supplier feedback.
And have you, I think, is it just the payment terms that have changed? Is it that means that activities shifted, or there's no other consequential changes of that 10 working day change?
Yeah, so we've not changed any of the other timelines involved in this. So I think last month we originally showed a sort of 30 working day end-to-end process, by increasing the payment terms by 5 days. We've just essentially shifted everything that was to the right of that, and we've got a process diagram to sort of demonstrate that a little bit later. Effectively, the end-to-end process is now extended by 5 days due to this 5-day increase.
Okay, yeah, that's great. I think the next element, again, it was a consistent piece of feedback, which was around the dispute threshold limit of being either £3,000 or the total amount payable on the statement if that was lower. And I think it was looking for clarity on obviously whether that would change, shift, or what was driving that amount in the first place.
Yeah, so we tried to, the original £3,000 was, we tried to benchmark this against existing industry processes. Feedback received was that it was too high. So based on this and conversations we had with some respondents, felt that reducing that to £1,000 was a better value to industry.
And I think just picking up as well, I think there was a bit of a view around, could there be some more defined timelines set in place for basically if a dispute is raised for PAB to review and to resolve a query. I know that it hasn't necessarily resulting in a change to the process of the legal text, and I think it was felt to be potentially too limited to set out that timeline. But I believe we are looking to resolve that within a cycle, PAB. Is that right? Is that the position that RECCo have landed on?
Yeah, I think that's correct. Yeah.
Okay. Next theme that we saw was around the provision of supply point data, so MP, XN, MPRN, MPAN level data as part of the statement, and that would enable suppliers to validate their statements. I think that is something that we haven't necessarily changed as part of the solution. But if you can kind of talk through the reasons for that or the position that we've got.
Yeah, sure. So again, I think we see quite a few responses on this line. It's just to sort of confirm that the scheme in itself won't hold that supply point level data. So it's not something that we have and we're holding back to suppliers. It's just when we were chatting through this with Ofgem and they gave us a direction, they wanted us to hold to when we obtain the data that should be an aggregated level. So it's just not available to pass on.
I think the data that's been used, it is settlement quality data that is being used to make the determination. So I think there wasn't seen to be the need to bring that into the scheme to hold. I think that would be the kind of the fair way to describe that.
Sorry, and Ed's got his hand up, and I presume it probably links to what you've just been discussing. So I don't know if Ed, if you wanted to ask a question.
Thanks. Yeah, it's just in relation to the challenging of any invoices. If we're not being provided with that MPAN or the site level data in the invoice that we're receiving, when it comes around to challenging the data, I've got a very strong concern here that we're going to be in a backwards and forwards case of we say you say in terms of the volumes and the volumes of meter points included and their associated ERKA data. Because if RECCo is saying, for the sake of argument, you've had 1,000 gains, and we're saying no, we've had 950. In terms of an evidence-based challenge process, I'm struggling to see how we can possibly reconcile that.
I don't know, Andy, or I think we've got John on. I don't know if either of you want to kind of pick up and respond on that one.
Yeah, so John isn't on. He's just messaged me. I don't think he's been able to make it. So yeah, I do understand the challenge. I think the idea behind the scheme is that and perhaps Sabia, I see she's just raised her hand from Ofgem, might be able to answer this a bit more detail in terms of like the policy direction. Is that okay, Sabia?
So it's actually John Windy at Sabia and I are in a meeting room that she's dialed in. So just want to be clear on is that the MPAN level data which is collected, which creates the data report which feeds into RECCo. My understanding is that is held for a period of time. It's just not held within the RECCo estate.
That is correct, yes.
Which means that in the case of a material dispute, that the backing data could be available, but the thought behind it is about materiality of this and hence thresholds. So absolutely take your point, Ed, about this, but just want to be clear that we're not saying that the site level data is not held and recorded. It's just held and recorded by the data supplier, and I believe, and RECCo can comment on the operational reality of this, but I believe that in the event of a material dispute, that reference could be made to those data.
And would we be able to obtain that data in some way, shape or form? Otherwise, we're just blindly challenging something that we don't know what your view of it is.
So it's not going to be provided as part of the statement as standard because it is switching data that's out there. We basically can rerun, go back to the source of data. And I think that is the view, that we would not hold it within the scheme itself, so therefore it's not included within the statements, but we would be able to go back to basically it's industry data. That is what is being used through that defined mechanism of identifying switches. And so we would be able to basically rerun the situation and get that data, but it isn't something that will be proactively provided through the invoicing activity. I don't know, Andy, if you wanted to add anything to that.
No, I think that's fair. And again, Jonathan might be able to clarify on this, but I think the idea of the scheme wasn't level, and it was more around the aggregation of the data.
And Andy, you haven't got a very good signal, so you might need to knock your camera off.
So just to not speak over Andy, but I've got a slightly more stable connection. So my understanding of the statements that will be given will contain a figure that mentions the number of switches and the aggregate volume associated, and therefore the MSC. And as a supplier, you should have a view of the number of cost gains, number of cost losses, associated volumes with those, EACs with those, or or gas volumes, and therefore, you can see quickly whether if any mismatch is based on a site count mismatch or a volume mismatch, and then a further level of dispute, if it meets the threshold, wouldn't need further investigation. Now, if I've missed something on the nuance or that it'll be helpful for people to clarify my understanding. But in seeking design simplicity for that, the view was that would be sufficient for a first pass reconciliation with a deep dive if there were more significant mismatches identified.
Yeah, I can see the point that you're making, and I don't want to bog down the call because I know there's other agenda items, but the main sticky points, it will still create a cycle of we say, you say, in terms of you say it's 1,000, we say it's 900, we can't see your data, you can't see our data, and given the fluidity of the data is my main concern, that we may be drawing different lines in the sand of cutting data at midnight versus midday, for example. That there are a lot of nuances in it, and I do feel that the simplest, the easiest way of doing it is to be able to compare your list with our list. But without that, it's just an arbitrary case of, like I say, you say 1,000, we say 900, and it's not an evidence-based way of disputing it.
Can we pick this up in further discussion, because I would like to talk to you about it, and if somebody could take an action to put us in contact, just so that I can understand this at a policy level, and we can pick that up if you're happy to chat, Ed.
Yeah, I'm more than happy to chat. As I say, I don't want to get the call bogged down too much on this point, given there are other agenda items, and I know invoicing is one of the items further on in the call.
What I'll do is I'll take that action and I'll set something up, and then we can talk it through. That's absolutely fine. And we have that opportunity to, anything that comes out. This is an opportunity for us to understand the further questions that are out there. We do have opportunity to potentially review, revise where we agree that there are changes needed. So this isn't kind of the end point and that's it. So I think happy to take away anything that we need to reassess again, but also through the consultation, provide us with, I suppose, more information to help us to understand any impacts of any decisions that we've made.
Yeah, and just on that, there's been a few comments as well on Slido, just kind of agreeing that I think they would, be in favour of having kind of an MPAN level backing data. So I think there might be more than one person, but I've got the names of those people. If they're, I don't know if they want to be a separate call or whatever, but I'll send you those so they can be involved in that conversation as well. So.
Okay, yep, that's great. Thank you. Okay, talking about invoicing, the final thing that we've got on this slide was around the invoicing at a supplier level, and the fact of would all registered MPIDs be included within that invoicing. So I think this was almost asking for confirmation of the position.
Yeah, so the idea. Sorry, Anne, can you hear me okay?
Yeah, I was just checking. Yeah, I wasn't sure if you were back with us and working. So yeah, all good.
Okay, cool. Yeah, so the invoicing will be at a supply level. It's broken down by all MPIDs and supplier shortcodes for gas, with gains, losses, and associated volumes, and it'll be broken down per MSC reporting week as well. So before weekly invoicing cycles and that level of granularity. I've also put an example on the next slide because a sort of a sub question of this was how if you a supplier switch from one of your MPIDs to another, and I just wanted to sort of confirm what data we'd have on that and how that would be represented in the in your invoice.
If we're right, just to move on, Millie, and then we can just bring that one up.
Yeah, so just to sort of talk through this slide, the top table there is just sort of showing the data that we'd receive into the scheme. So it's just assuming that the gaining MPID and the losing MPID are both belong to the same supplier, the COS date, how many switches are involved, and the volume, and then the charge for that, the MSC charge for that day. Obviously, all these data items are just for example purposes. So effectively, how that would look on your invoice is just to sort of show that they cancel each other out in terms of you'd have your MPID where you're gaining, you get your money through for that, and then where you're losing for your other MPID, effectively it's just the reverse of the charge, so it cancels out as zero. I know we had a few questions on how this would work, so just hopefully that demonstrates how it would come through.
Okay, if we can move on to the next slide. So sort of I've consolidated a number of responses that we saw around certain scenarios of switches. So whether that be kind of ETs, solars, intra-company switches, around actually requesting clarity on what was included and excluded from the charge, or what should be included and excluded from that identification as a switch. So Andy, if you can perhaps give a bit of a summary of the position on this one.
Yeah, sure. So we're taking the industry data, and effectively any switch will be recorded, and it will be treated as an individual switch, based on what we consider to be a domestic MPAN as set out in the high level solution document that went out. The only exception we'd have to this, and which we wouldn't include in invoicing data, is if one of the suppliers involved only holds a non-domestic license, in which case they're not party to the MSC, and therefore it won't be invoiced or credited to either party.
Okay, the next theme was around clarity on exactly which estimated annual consumption or annual quantity value will be used for the calculations.
Yeah, sure. So for the EAC, it will be the last available EAC that's held by the losing supplier prior to their loss date. And for the AQ, it's the rolling AQ for the month in which a which a switch occurs.
And the next one was more of a acknowledgement, I think, from us on the fact that suppliers did call out that there will be a financial impact, not just through the payment of the MSC payments themselves, but through operational resource and operational costs for receiving, validating and processing the statements and the payments, and potentially any reporting that needs to be developed to enable the validation of the MSC invoices. So I think this is something that we acknowledge that there is operational impact of the scheme on participants. It is something that we do acknowledge, but I think there isn't necessarily anything that we would look to change or respond to. I think is an accepted part of that scheme, but I think we just wanted to highlight that it is something that we obviously have acknowledged. And then the final one on here, which was around the actual identification of the domestic consumers and domestic switches, and how we'd actually propose that in the solution that had been put forward. So Andy, if you're right to cover that one off.
Yeah, sure. So I think originally when we sent this out for impact assessment, we'd split how we were going to do this pre and post CSS, taking on the feedback from industry. We've now removed this, so we won't be using the domestic premises. It was only, I think it was only in electricity where this was highlighted, and we'll just continue with the profile class and measurement class that we outlined in the solution, and that'll carry on throughout the scheme and won't change after CSS go live.
Okay, if we could then, that's it. Thanks, Millie. Yeah, so just to talk through. So Andy, I suppose I'm going to hand over to you on this one. So these were the principles on which the solution had been designed. I don't know if you want to just perhaps talk us through what's remained the same, but particularly obviously highlighted red of what's changed off the back of the IA responses.
Yeah, sure. So I think we probably covered some of this in what we just talked about, so I won't go through it in too much detail. I think it was covered in more detail in the last session as well. This is just calling out in red where the changes effectively that we've made since it was last presented to industry. So that's just confirming that the payment terms have increased to 10 working days, and around disputes that it was previously £3,000 and it's reduced to 1,000.
Okay, and then I'll let you also talk us through the process as well, if that's all right, on the next one. So Millie, yeah, that's it. Like you said, in the last session we did talk through this in quite a lot of detail. I don't know if you just want to do a quick recap through, Andy, and then just pick out the bits. Obviously they're very much the payment window and the knock-on implications of that to the end of the process.
Yeah, sure. So this sort of breaks down the end-to-end process. So I'll run through it very quickly, and please feel free to ask any questions if it doesn't make sense. So we're anticipating that we'll receive data 5 working days following a 4-weekly invoice period ends. That will then be passed on to our service provider, who will load and validate the data and calculate the charges for invoicing. That will come to the RECCo finance team, who will essentially produce the physical invoices and send them out to industry. And this is where we've increased the payment term. So it was previously 5 working days. You've now got 10 working days to make any payments. The finance team will then take all them payments, send them back to the service provider, so that they can calculate how much we've received based on how much was invoiced, and then that will be sent out. Any parties who are due credits will be given the percentage of what they were owed based on the percentage of funds that have come in. So it's just to sort of highlight, yeah, we've increased the payment window by 5 working days, but the entire, if you look on that top row, everything else has moved out to the right, and we haven't tightened any timescale. So where it was previously 30 working days that you'd receive credits, it's now pushed out to 35 based on the increased payment window.
And this might be one for you, Anne. It was to do with, I think, when you were discussing the impact assessment responses, and it was just the the question sort of says that solar and portfolio migration didn't seem that they've been taken into consideration. I didn't know if you had any comments on that, or that might be a RECCo, I don't know.
I think it might be RECCo.
Yeah.
I can have a go and then Andy kind of, correct me. I think we have considered it in the sense that they will be identified as switches, but then that shift between the IDs is where that will be reflected. And I think, Andy, the invoice example that you showed could have been that situation.
Yeah, that was the idea, that example set out that scenario. So just to say, if you're doing sort of inter-portfolio switches, as long as it's under the same supplier ID that you're getting billed for, that's how it will sort of net itself off against each other.
And I think once the switches, so the solar has been confirmed, there is an acceptance that actually there would be within the RECCo finance team almost a manual process to make sure that the recognition of the MPIDs is under the correct supplier. So this kind of cancelling off, netting off kind of will work appropriately. And I think that isn't necessarily relying on industry data to have all been updated, but it's almost that recognition that the solar has been confirmed. Therefore, we do know that certain MPIDs will have shifted, and therefore we can do that netting off. I don't know, Andy, if there's anything more to add on that one.
No, I don't think so. That's exactly how it will work. So the MPID will move to the new supplier, and if there's any portfolio reconciliation that goes on the back of that, it'll work in the same way as we outlined in the invoice example.
Okay, and then a couple more have just come in. Is this a cost neutral scheme? What happens if supplier A does not pay MSE within payment terms?
Andy, if you want to cover that off, or
yeah, sure. So it is, forgive my understanding of cost neutral, if that means money in, money out. So yeah, if for example the way it will work, if someone doesn't pay, in effect, if we only receive 80% of payments due, the people who are in credit will get 80% of their payments back, and that will be reconciled until such time that 100% of payments are received, and every payment cycle for any late payments received will be redistributed to people in credit from those periods that are outstanding.
Okay, and then another one to do with the finances. So someone said that I'm unclear on where the cost of the MSE system administration will be recovered.
So this is there's provisions within the RECCo budget for this, the kind of the build and then the administration of that. I don't know, kind of Andy, if that is something that you can provide that view on.
Not off the top of my head. I don't know if John's joined and does have the answer to that.
Yeah, I don't have a lot more to say what Anne's said, to be honest. There was a provision in the 22-23 budget to cover the costs of both the build and the administration of the scheme, and so far we're expecting to be in under budget, so we're not expecting there to be any additional costs resulting from either the build or the operation of this scheme. Obviously, if Ofgem decide to extend the duration of the scheme, then we'll have to include something in next year's budget as well for the operation of it. But as things stand, it's all covered in the existing RECCo charges that have been budgeted for.
Okay, thank you. And then just one last question has come in. So someone said, I'm not clear on how the process would work if we were to use switching process of customers as part of a system migration process.
So this is the sort of between IDs under the same supplier, I think. I'm taking that as meaning. So I think this is where this supplier netting off would account for that type of intra-company switching, where the switching is being used as the mechanism of transfer. The scenario that Andy's covered off is we're proposing that is the way that it would net off there from A to B. I don't know, Andy, would that be fair way to describe it?
Yeah, that's my understanding. If the question matches that scenario, yes.
Okay, and then another question's come in. As a non-domestic only supplier, do I still get charged for RECC's MSC provision?
Yes, you will. Yes, so all suppliers currently contribute to RECCo's costs, and they are not disaggregated between domestic and non-domestic suppliers. Yeah, so there is a small amount that non-domestic suppliers will be paying towards it. I think in the grand scheme of things, you know, arguably you're paying for the benefits that come from the market being held whole and the stabilisation that comes from it. So even though you might not be a direct recipient of MSC charges, I think it's right that there's still a kind of an industry contribution to the operation of the scheme, if you like. I think if you go down the path of trying to introduce separate charges, tiered charges between domestic and non-domestic suppliers, then arguably we'd probably have to look at the whole of services that RECCo provides and see which of those two pots things should fall into as well. But for the sake of this relatively small amount of money for this short-term scheme, we haven't made that distinction.
Okay, thank you. And then appreciate time's moving quite quickly. If Carl, you wanted to ask your question?
Yeah, it was just going back to the supplier to supplier switch, kind of another scenario which is probably minuscule in comparison, would be if there was a white label to back to supplier switch. So say if we had a white label and then we got the customer from that white label, essentially they would switch from a shell MPID to a shell MPID and we would pay ourselves.
Yeah, this scenario kind of earlier on, I suppose if it doesn't really matter if it's a just an internal reorganization or a sole or anything like that. Essentially, as far as the statement is concerned, as far as the reports are concerned that we'll receive from the data providers, those switches are still captured. It doesn't distinguish the reason for the switch, so all of that data will still be there, but we'll recognise that both of those MPIDs fall under the same company group. And so the statement would show that they've been netted off against each other, and so you wouldn't have to, you know, make a payment to RECCo only for us to make the payment back out to you. You know, there'll be a statement showing that a number of transfers have taken place, but the net position is that, you know, zero charge results is owed either way. Hope that helps. It's just that there isn't an ability to separate out the reasons for the switch having taken place. So in the interest of simplicity, we will see it, as I say, but it won't have an impact on the invoicing position.
Okay, cheers.
Okay, so we'll just draw those questions. There will be other opportunities, but do we want to move on, Anne?
Yeah, please, Millie. And then I'm going to hand straight back to Andy as well. So to cover off invoicing, and this is going to be focusing on very much the invoice periods and particularly the first invoice period post implementation. So, Andy, if you're all right to kind of cover off this in the next few slides on invoicing.
Yeah, sure. So this table is just sort of outlining the first 16 weeks of the scheme, which invoice periods they map to. So as we sort of touched on before, they're 4 weekly periods. If we can go to the next slide, please. So this is just to confirm what we're proposing to do for the first invoice run. So probably some context for this. The idea is that effectively the system that does the billing for and the billing and invoicing for MSC will be available on the 30th of June, which gives us the date of 12th of July, where we'll effectively hold data for invoice period 1, 2, and 3, as outlined on the previous slides. And if we're going through the timetable as sort of we set out in the process, we talked through the process diagram before. This is effectively will show you when you'll get charged. The charges will be calculated on the 19th of July. You'll receive your invoices on the 26th of July, which will be for the first three periods. Payments will be due on the 9th of August. We'll allocate the funds on the 16th of August based on what's come in and the percentage that you're going to receive out. And on the 23rd of August, that's when anyone in credit will be the money will be returned to them. So we have considered a number of alternatives. This felt like the most logical solution to do all three as one run. It's worth pointing out that the first invoice period would have closed. Those first 4 weeks have closed with the MSC not being triggered. We're, I think, 3/4 of the way through invoice period 2, and that's yet to be triggered also. So we wouldn't plan on sending out invoices if the MSC is 0 for all periods, but in the event that it does, this is what the timeline would look like. And then if we go to the next slide, effectively for invoice period 4 and any other invoice periods going forward, this sort of shows the cadence of when it will kick off, and you'll have a normal. This is your normal window. So invoice period 5 would start 4 weeks following the 9th of August, and you just have one invoice period per run. So just to sort of reiterate, that first one would be a sort of catch up to take on the 12 weeks worth of periods that would have elapsed.
Okay,
Really?
thank you.
Any questions? I was going to say, have we had any on invoicing?
Not on invoicing. One has been raised about whether we'll share these slides, and yeah, we can. We'll share those following this event. So, but I'm just going to quickly do a refresh to see if anybody else has raised anything via invoices. Did anybody have anything they wanted to raise verbally? Otherwise, I guess, yeah, I haven't received any other questions, but I know we do have another opportunity as well. So we'll crack on.
Okay, so I suppose apart from any internal preparation that suppliers need to do, paying invoices that are due when they become due, as part of the release readiness activity, readiness for implementation, one of the things to make suppliers aware of is that you will be contacted to provide contact details and bank details for the scheme. What will happen, these will be requested by the code manager on the 6th of June, have until the 17th to provide those details. There'll be a pro forma to be completed, and we'll be able to share what that looks like. It's really just to make you aware that that is going to happen, and we have until. That just means that we can feed those details into the scheme and just make sure we have the right information for any payments that are due, or for any operational questions that we need to contact you about the scheme. And move on. Thanks, Millie. And I suppose we touched on at the start the timeline for the change proposal, and so it's just that kind of reminder. We are in the consultation window. Consultation responses are due by close of business on the 1st of June. It really is an opportunity to voice your opinions on the proposed solution in the legal text, but also the case for change as we've set out, the proposed implementation date and approach, and the code manager's recommendation as well. So like I say, 1st of June, end of the day, is the response date. So hopefully people have used this opportunity to ask the questions that are outstanding, that helps them to develop those responses. Obviously, we've taken the action away to talk about MPXN level data as part of statements, or how that is available. We'll take that away and confirm if there's any changes off the back of that. But so far, we've got until the 1st of June for consultation on the current proposed solution. And if we can just move on to the next slide. For those that are not familiar with responding to consultation, so you do this via the RECCo portal. So from the main dashboard on the RECCo portal, you access the change and release page from the left-hand menu. And from there, you access the consultations register. And then within that register, there's a specific page for this CP. So what we've got here, shown here, is the change and release page and the link to the consultation register. And then at the bottom there, how it would appear on that register. If we can just move on to respond to the consultation. You would go into the consultation page, you'd view and download the supporting documents and the response form, complete the response form, and through the portal, through this consultation page, add response to then upload that completed document. So I'm hoping that more people are becoming familiar with the consultations and how to do that, but I thought it's just worth a reminder if it is the first consultation that people are looking to respond to. And it's the final chance if anybody does have any questions, any final elements around responding to the consultation or questions that they need to have answered before they submit that response, then please ask.
Thanks, Anne. I've just got a question. I think this is to do with the contact details when we ask for the bank details. Is that going to be sent to the contract managers?
It will, yes.
Yeah, okay. I'm just going to see if anything else, any other questions. Did anybody have anything they wish to raise verbally? If so, just pop your hand up. Otherwise, I'll just keep refreshing Slido and see if there's any other questions. I don't think anything else is coming in. And did anybody else want to raise anything verbally? I will take that as a no. So I think that concludes everything. So as I said earlier, we do have, again, using Slido, we do gain our feedback from there. So if you want to pop how you thought the session went and any comments on how the event was run, or if there's any information that you require, then please just pop them in there. Otherwise, I'll hand back to Anne, I think that's it from me.
Yep, thanks, Millie, and thanks everyone for attending. Hopefully, it provided a view of what came out of the impact assessment, how we've responded to that, and giving people the opportunity to ask the questions that they need to answer and respond to the consultation. So thanks very much for everyone for attending, and you get a few minutes back.